and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space. Oyo withdraws its IPO papers as it plans a private fundraising drive. Sources say it's looking to raise up to $90 million from family offices. Adds that the money will go towards paying off debt to achieve profitability.
Paytm's Q4 loss widens to 550 crore rupees. The winding up of the payments bank leads to an impairment of 227 crore rupees. Warns of more losses in Q1 of this fiscal and expects to recover starting Q2. Paytm also signals more job cuts, plans to save up to 500 crores in employee cost.
Zerodha co-founder Nikhil Kamath invests in Collective Artist Network via a secondary investment. The deal facilitates an exit for InMobi's Glance Screen, an early investor which has made a 5 times return on its bet.
Urban Company announces its 5th and largest ESOP sale program worth 203 crore rupees. 446 current and former employees likely to participate. Dharna Capital and existing investors, Ivy Capital and Process to purchase the shares.
Electronics wearables brand Noise acquires AI-focused women's wellness platform SocialBoat for an undisclosed amount. SocialBoat co-founder and CEO Swapnil Vats will lead product development at Noise for the company's flagship smart wearable Luna Ring.
General Catalyst-backed finance automation and compliance platform Cashflow has acquired Logitax, which offers GST and e-invoicing solutions for corporates and SMEs. The deal value remains undisclosed.
Europe's landmark rules on artificial intelligence will come into force next month after EU countries endorsed a political deal reached late last year. The European Union's AI Act imposes strict transparency obligations on high-risk AI systems such as OpenAI's ChatGPT and Google's Gemini.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, Paytm's 4th quarter loss widened to 550 crore rupees after RBI restrictions on its payments bank business led to an impairment of 227 crore rupees. Now, the fintech major has warned of more losses in Q1 of this fiscal. It has also signaled more job cuts. Ritu, you've been tracking this. Take us through Paytm's numbers and, more importantly, the management commentary on the way forward for the company.
Well, Arundhati, it wasn't a good 4th quarter for Paytm, but what is worse is that the coming quarter is expected to be not much better, with the full impact of the RBI action against Paytm Payment Bank playing out. Now, 197, the parent company of Paytm, reported a 148% increase in net loss for the 4th quarter sequentially on the back of a 227 crore write-off for the investment it had made in the payment bank, with operating revenues also falling by more than 20% over the previous quarter. Now, Paytm expects a 500 crore hit on EBITDA from the discontinuation of the wallet and the FASTag business. In the 1st quarter, it expects a slowdown in merchant and consumer operations to hit EBITDA by another 100 to 150 crores and another 75 to 100 crores from the slowdown in the lending business. So for the June quarter, Paytm is expecting revenues to fall by more than 50% sequentially to 1,500 to 1,600 crore rupees, and it also expects the EBITDA loss to double to 500 to 600 crores. Now, the impact of the RBI action was also very much visible in monthly transacting users in April, falling by 24% compared to January. Meanwhile, Paytm has also decided to pause the small personal loan business until the credit cycle plays out, and it is also going to remain cautious on merchant loans as well to avoid any asset quality deterioration. Now, going forward, the company's focus is going to be on driving credit growth through a distribution-only disbursement model, monetization by cross-selling financial services, and doubling down focus on insurance and wealth to improve the bottom line. Now, with financials taking a hit, the company also hinted at potential job cuts and said it is optimizing the cost structure, leveraging AI capabilities, all of this to achieve significant cost efficiencies, which includes creating a leaner organization structure and pruning some of its non-core business. So that is as far as Paytm is concerned. But the other big startup in news today, hospitality company Oyo, has shelved its plans to hit Dalal Street. The company, which withdrew its IPO papers from SEBI last week, is now learned to be looking at raising money from private investors in a down round. CNBC-TV18's Aishwarya Anand has got more details and joins in now. Aishwarya.
Hospitality major OYO is in talks with fintech firm Incred to raise up to $80 to $90 million from family offices, sources have told CNBC-TV18. Now, this comes after the company decided not to go for an IPO and withdrew its DRHP papers from SEBI on May 17th. The startup is seeking a valuation of $3 to $4 billion, which is a down round of nearly 75 to 77% from its peak $10 billion valuation back in 2019. Sources added that a large chunk of the money will be used to pay off OYO's debt, which in turn will help them achieve profitability. In the town hall meeting today, founder Ritesh Agarwal said that OYO had its maiden net profitable year, posting a profit after tax of 100 crore rupees in FY24. This comes as OYO approaches the completion of refinancing plans to earn up to $450 million through the issuing of dollar bonds, which is being led by JP Morgan. Now, the company is planning to file a fresh DRHP post the financing round. The SoftBank-backed startup refiled its DRHP for IPO via confidential route last year to raise up to $400 to $600 million from public markets. Back to you.
So, OYO shelving their plans to go public right now. Thank you for those details, Aishwarya. Meanwhile, Prime Minister Modi says his government is committed to providing the right environment for startups to flourish. He said this while praising Zomato CEO Dipinder Goyal on his remarks that his father was not expecting him to do well as a startup entrepreneur because they did not come from a well-established family. Calling Goyal's journey truly inspiring, the Prime Minister added, and I quote, "In today's India, one surname doesn't matter. What matters is hard work," end of quote. The Prime Minister also personally praised several Indian startup founders who spoke at the Vishesh Sampark Abhiyan hosted by Union Minister Hardeep Singh Puri at his residence.
I would say that I started Zomato 16 years ago in 2008. And my dad at that time told me, "Janta hai tera baap kaun hai?" And his point was that you can't do a startup, right? And so I come from a small town in Punjab. That's the background. But over the last 16 years, I think a lot has changed, especially over the last 7, 8, 10 years as well.
Okay, we're going to move on from that to our hot seat today, where sports technology company Stupa Sports Analytics recently secured 28 crore rupees in a pre-Series A funding round to fuel its talent acquisition, global expansion plans and product enhancement initiatives. Founded in 2020, Stupa says it has established more than 15 strategic partnerships with key governing bodies and sports federations, offering them solutions to bridge the gap between traditional sports management and modern tech advancements. So joining me now to discuss the road ahead for the company is Megha Gambhir, its co-founder and CEO. Megha, thanks very much for your time here on CNBC TV18. Start by giving us a 30-second overview of what Stupa does, the gap that you've identified in the market as a sports tech firm that you're solving for.
Thank you so much. Thank you so much for having me, actually. So in a nutshell, if I explain you what Stupa does, we basically are touching upon two areas. One is helping the federations and, federations and league organizers and the people who are basically running the sports ecosystem, helping them in digitizing all of the operations and automating them and helping them to basically, make more money by doing the media rights and also by, enabling B2C monetizations and so on. So if I talk about what exactly a federation does, so they basically, run events, run or manage the memberships, manage players and help them in their development programs and so on. And this is what Stupa SaaS platform, which is like a licensing tech. We basically enable the federations to run all of their tournaments, leagues, manage their rankings, schedule fixtures, stream their matches, as well as create and collect a lot of data and media out of the platform, and then further actually helps them in also, distributing and monetizing different segments.
All right. So how exactly then are you going to be using this 28 crores that you've raised?
So the plan is that, so we already have been working with a lot of strategic partners in Europe. We work with 15 plus global clients. And that's part of the one product. But we also have another product, which is more related to fan engagement, where we are enabling the international sports ecosystem to add more and more data and AI into the TV broadcast for better fan engagement. So the plan is to basically expand further in Europe with different sports, because we started with TT and now we have already gone ahead with paddle and badminton, and we do want to also expand in multiple sports within Europe as well. The other plan is also to capture the US market as well as the Indian market. We are yet to actually, I would say, go very deep in the Indian market. That's one of the plan which we do have, given the sentiments of Indian government as well, growing the Indian sports ecosystem and digitizing the Indian sports ecosystem. We do also feel that we are at the right time where Indian sports industry is also booming. So that's the second step we do want to take forward,
Okay.
other than the expansion in Europe, we can expand in India
Sure.
and US. And the third is basically to build a very strong tech team. We already have it, but we do also want to, attract top talent in AI and in engineering to help us build the system and take it to the next level.
All right. This diversification that you were talking about into upcoming sports like pickleball and paddle. Tell us about these plans in terms of what sort of additional revenue generation will they bring?
So I feel that other than the traditional sports which we already have in racket, specifically, I would say, tennis and table tennis and badminton. You might have heard all these new sports also which are coming, and they are coming to India as well. I'm talking about pickleball and paddle. And I see that, they also, probably paddle can become an Olympic sport in future as well. So I feel that there is a lot more room to also help these sports grow and then, further expand into the market from the beginning itself, which can give a lot of, revenue benefits to the company, but also alongside helps the sports as ecosystem as well to grow further. So that's basically the kind of an idea, because where we have built and proved our product in one market or one sports, we feel that now it's the time to diversify into the multiple sports and just not in racket, but even in future we can take this to volleyball, basketball, and so on, and help the other sports as well. What table tennis could achieve in Europe with our product, and also add a lot of value to our revenue as well.
All right. So, you've done this 28 crores pre-Series A round, 7.5 crore earlier, but you plan to raise even more capital in 2025. Tell us about that.
So it completely depends, actually. Yes, we do plan to raise it, but I think the focus is currently at the moment, we needed this funding because we already have established us as a right product market fit in Europe, and we have seen a lot of traction. And now we want to take this to places, to different federations, different sports, and execute the similar model there as well. Especially in racket sports for an year. And then after that, we do feel that the product actually unlocks a lot of monetization opportunity for the federations through the B2C or the data distribution through B2C, as well as through media rights and so on. And that would be the time, when we are actually unlocking another revenue potential, which is, I just mentioned, media rights and B2C. That is the time we may require more capital, because that's going to be quite extensive and intensive as well. And that would be the time when we will be looking out for more funds.
All right, Megha, we wish you the best with those. Thank you very much for your time here on CNBC TV18. Pleasure speaking with you.
Oh, thank you so much for having me here.
Well, Ritu, from one woman founder to another on today's episode. So TrackNow, a fleet management and telematic tracking solution company, has raised an undisclosed sum in its seed round. GI Ventures and Blue Smart co-founder Anmol Jaggi were the lead investors. The Ahmedabad-based supply chain tech SaaS startup will use the funds for expansion in R&D. Joining me now to discuss this further is Pooja Khemka, the founder of TrackNow. Pooja, thank you so much for taking your time out and being here on Startup Street today with us. As I said, you're a fleet management and advanced telematic tracking solution company. Talk to us about what it is you have on offer. Give us a sense of how you're using AI to solve for this segment.
Thank you. Thank you for the opportunity given to TrackNow team. So basically, we are a location-based service providing company. We cater to the logistics sector wholly. So currently we've been catering to 400 plus schools and colleges pan-India and 400 plus corporates. So the solution is a telematics solution, which we are catering to different corporates. The idea basically is to solve the pain point of the logistics sector and the corporates. As we all know that late deliveries of goods and truck imposes huge penalty not only on the Fortune 500 companies, but also onto the fleet owners. So here's where TrackNow is making a difference by developing the entire solution indigenously in India on Indian soil and providing real-time update to the end customers.
Right. You know, before I delve deeper into that, you recently raised a seed round. It was undisclosed, but can you tell us how much you've raised via this funding round? And more importantly, how do you plan to spend the funds?
So after getting a strategic investor with us, Mr. Anmol Jaggi and GI Ventures, the majority of the funds would be utilized basically for the expansion of the team and also for the R&D of our proprietary device. Currently, the devices are being procured. We plan to utilize our own devices for the system. Together with that, the majority of the funds would be used to increase our presence in India initially so that we can get a closer touch with our customers. So
Right.
we have a, yeah.
Yeah, so you want to increase your presence in India at this point with the funds that you've raised. And you also pointed out that you're going to use the funds to enhance your suite of proprietary products, right? So can you elaborate on these plans and any new offerings in the pipeline?
Yeah, so basically the devices would be capable to talk to almost 40 plus devices within the trucks, buses, or the cars. So the device would be entirely robust. More of the details would be shared when it's live. So it's already under approval.
Right, so it's under approval and we'll hopefully see that soon. But, you know, take us through the kind of sectors you're currently working with. You did say schools and then you said a whole host of corporates, right? So which are these corporates that you're working with? And by how do you help them reduce their turnaround times? By how much are you helping them do this? And where are you seeing the most traction?
So after running an autopilot profitable business in the school bus sector pre-COVID and entering into the logistics space after COVID, it's like a boon to us wherein we are able to reduce the turnaround time from 1 hour to 15 minutes. So that's our team's accuracy that we are able to achieve with our devices and also with the software that we have built up. So this helps the logistic owner to reduce the timeline in which he is able to deliver the goods together with the real-time tracking of the fleets. The sectors which we are covering and we are catering to is coal, oil and gas. So that's the sector wherein we are getting huge success rate with maintaining 2 meters of an accuracy in the location-based services. So we are able to prevent the coal theft to a larger level. Together with that, we are catering to the FMCG sector, a topmost logistic provider company and the coal importer company has been working with TrackNow since last 3 years after COVID.
All right. And you also, as you just said as well, you claim to be profitable. So talk to us about the kind of revenues you're currently clocking and where will the next leg of growth come from? I mean, first it was schools, now you've gone into corporate. So where's the next leg of growth going to come from for TrackNow?
Yeah, so the majority of the revenues would be definitely, as Modi ji said, regarding the hard work. So we have pivoted from the school space to the logistics space. The majority of the revenues will definitely come from coal, oil and gas, which is our sector. And also we are working with major government organization and players in India to ensure that there is a safety of fleet. As we rightly know, currently to the national logistic policy, many devices are made as a mandate to ensure the safety of women, safety of kids, safety of fleets and assets. So that's where we plan to get majority of the revenue. The second vertical where we plan to is battery management system and EV sector as well, which is booming.
All right, so battery management and EV sector as well. But can you just give us a sort of sense of what are the revenues that you're clocking currently and what targets you set for yourself for the end of this year?
So the revenues are almost 5x of last what we achieved. And the plan in this year is again 5x to the last year's revenue. So it's in crores and it's almost 5x of the last year.
All right, growing 5x every year. All right, thank you so much for joining us on the show, Pooja. We're completely out of time, but we wish you all the best on your journey going forward.
Thank you. Thank you so much.
Well, we aren't quite done with our stellar lineup of female founders yet, but we have to take a break. Up next, Chennai-based skincare startup Chosen bags $1.2 million. How does it plan to use the funds? We'll find out on the other side.
Welcome back. You're still with us on Startup Street. Just weeks after an equity-free grant of $100,000 from Peak 15 Partners, Chennai-based skincare startup Chosen has raised a seed round of $1.2 million. The latest funding takes the startup's valuation to north of 150 crore rupees or $19.1 million. Founded by Chennai-based cosmetic dermatologist Dr. Renita Rajan, Chosen is developing an IP through patents and innovations in formulations as it expands into IoT-led skincare. CNBC-TV18's Jude Sunnit checks in at the startup to find out more. Take a look.
Her company might be the new kid on Chennai's startup block, but Dr. Renita Rajan already has a fair bit on her to-do list. The cosmetic dermatologist's 4-year-old skincare startup Chosen has raised seed funding of $1.2 million from friends and family, money that will be used to grow headcount and supply chain. But the doctor already has her eyes on the bigger picture.
Recruitment and supply chain is where this funding will be utilized. The idea of going with the seed was to give us some level of flexibility to see what areas we want to move where, and then with the strength of that growth, then hopefully later this year we would be looking to associate with interested VCs who've already expressed a lot of interest post-Spark to see if we can associate for a pre-series at 10 to 20 million USD.
Earlier this year, Chosen featured on Peak 15's third cohort of women-led startups. The association saw the company secure an equity-free grant of $100,000, which signaled a coming of age of sorts for a company founded 4 years ago. The grant was also significant since it flagged off the start of Chosen's ongoing funding journey. Over these years, Chosen has built a multi-channel ecosystem of cosmeceuticals, that's cosmetic products with bioactive elements for health benefits, topical application products, those that are applied to a specific area on the skin, and nutri-cosmetics, products that have an outcome on personal care and nutrition. The startup's key differentiator is that each of these products eliminates endocrine disruptors at the source and is curated for Indian skin types. Today, Chosen has 34 SKUs, 12 in the pipeline, and 30 more being prepared for launch in the next 18 months. Its products hail from segments like sun care, hair care, and collagen, to name a few.
The next step for us is to explore partnerships with B2B in the hospitality, health, travel, leisure sector, so we can have these channels distribute the offerings that we do have.
With a headcount of 130 and active recruitment in the works, Chosen's other big advantage is its access to a potential customer base of 50,000 thanks to Renita's clinical practice. Even as its scale-up begins taking off, the startup is already projected to grow 2x this fiscal, with estimates of medium to long-term momentum thanks to continuing demand.
Nobody wants to spend time, energy and money to do something for a short-term, short-lived outcome. So the idea of somebody benefiting in the long term from products that are meant to be safe and effective for now and for the future appeals to us, and that is typically the essence of Chosen.
An LED mask design patent in the works and 4 more applied for, a melanin lab under development, and an ongoing 10-year project on an IoT-led personalized skincare tech. There's a whole lot more lined up on the Chosen launchpad. In Chennai, Jude Sanath.
Okay, so that's the last of our stellar female founders on the show today. On that note, we're going to wrap up this edition of Startup Street. From Arundhati and me, it's a goodbye. But stay with CNBC-TV18. More news and updates continue on the other side.